Kimberly-Clark says it's raising its prices. Same deal for Procter & Gamble, so expect to pay more for Pampers, Bounty, and Charmin. To the Fox Biz All-Stars on just how bad this is going to get, Jonathan Honig, Elizabeth McDonald, and Mike Norman. Got to start with Jonathan. How bad is it going to get?
Well, you know, Charles, it's bad now, and the Fed doesn't seem to want to acknowledge the problem, despite the fact that, as you pointed out, companies ranging from McDonald's, Kimberly-Clark, Procter & Gamble are all acknowledging that their costs are going up. Just a matter of time before they start passing on those costs to consumers. And to tell you, with silver at $50 an ounce, gold at an all-time high, I think you've literally got to have blinders on not to acknowledge that inflation is the market's #1 concern right now.
Mike, you've been a big rah-rah fan of what the Fed's been doing.
I have not.
Are you upset now that your pamper prices are going up?
I'm upset that I'm going to have to use one tissue to blow my nose now.
You need that tissue, Charles, don't you?
Yeah, poor Charles. Look, here's the thing, all right? First of all, we don't have a broad inflation because you can't have that without incomes rising to push the inflation higher and higher and higher. What we have now is what we call a relative value story. You're having a market reaction to events, Libya, these things, and also the fact that we're burning up a big percentage of our food crop for ethanol. What you also have, Charles, is a huge amount of speculation that the Fed is kind of taking a hands-off policy on this, as is the administration, and that speculation is driving up oil prices, it's driving up gasoline prices, and that's why Kimberly-Clark and other companies are raising prices, because it all flows through the chain.
I agree with Mike up to the point that, you know, about the speculation story. I mean, $250 billion worth of speculation, a drop in the bucket of a $50 trillion commodities market. But he's making good points here. But hang on a second. Listen, you know, I'm always worried when companies say they're hiking up prices. It's sort of, remember Y2K, companies were saying we're going to jack up all sorts of costs, and it never happened. I mean, I don't see inflation coming in the door just yet, Charles. I think Mike is absolutely right. Bank credit is still low. Wage growth is still low. There's not the monetary supply is not yet in the economy, but it is coming. And so, you know, I got to say something. The biggest defender of the U.S. and if you want to get rid of speculation, by the way, you know, strengthen the U.S. dollar. The biggest defender of the U.S. Hang on a second.
Enacting Dodd-Frank the way they said with the position.
Well, we got to enact it to know what's in it, according to Chris Dodd. But you know, the biggest defender of the U.S. dollar right now is the People's Bank of China, because they're buying our treasuries. And the biggest underminer, undermining is the Federal Reserve.
And the Federal Reserve continues to manipulate interest rates, prompting more and more people to want to get out of the dollar. I mean, you even have, you know, China this week, Charles, talking about looking for all their alternatives besides the dollar. And, you know, even when you have S&P talking about downgrading their view of our own debt.
Oh, isn't that the same company that rated all the toxic subprime junk as AAA? Listen, oil and commodity prices are going up in euro, they're going up in yen, they're going up in British pounds. It's not a dollar story. It's going up in every currency.
I will say this, though. I mean, it's obvious that the average person out there feels inflation. I would prefer to have classic inflation, where at least we're making more money. We're paying higher prices without making more money.
That's exactly why it's not going to last.
Well, listen, the fact that the Federal Reserve thinks that they can magic up more employment and more jobs by dialing up inflation and reflating assets, I mean, it's ridiculous. And what happens? What happens if unemployment goes to the roof, and then you've got inflation really coming down? Can the Fed tame inflation by jacking up interest rate if unemployment goes higher?
And who pays? And who pays is Joe Sixpack, is the average American. The president of the administration always talks about wanting to help. They're the ones who are working harder, making less, and their savings, literally the money they have in the bank, worth less and less and less every day.
I thought you're for that. Aren't you Mr. Market guy? Let the market forces work and everything will be fine. I mean, isn't this the market in action here? Responding to a supply shock? The prices are going up. Isn't that what is supposed to happen according to your theory?
No, Mike, the Federal Reserve's manipulation of interest rates has nothing to do with the free market. That's what's causing the inflation and prompting the dollar to erode in value day after day after day.
You want them to manipulate the rates higher? Is that it? That's a manipulation too, isn't it?
Mike, I'd like them to stop manipulating the market, start letting the free market exercise itself.
I don't think we've had a rate change in over a year.
Mike, you would see interest rates rise.
Mike, you're confident, though, that the Fed will flip the switch at the right time before we fall off a cliff here?
The Fed has no tools to control inflation. The Fed has no tools to control inflation.
Says he's 100%
inflation,
confident.
Mike.
It creates the inflation. Look, 0% interest rates takes income away from people. This is what we're talking about.
Yes,
without
that's
income, how can inflation be sustained? It's a bubble, then it's going to collapse, just like the real estate bubble collapsed, and everyone's going to be out of a lot of money.
Before we end this, what's going to collapse?
This commodity bubble.
The commodities bubble.
Yeah, this inflation spike that we're feeling.
I mean, will it collapse in time to save the average household, which is really filling it at the grocery store?
You know who's going to suffer again is the average household.
But you're saying we don't have inflation just yet.
Not a broad inflation.
I think we did get a consensus on one thing. It's the average person out there.
They're going to get hurt again. They're going to get hurt again.
Disagree a little bit on why. Thanks a lot, guys. We're back to you in a little bit. Breaking